2021, blah, 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 all that nice, neat fuss. There it is right there. And we're live. Yay! Good evening, everyone. This is James from Dividend Stock Talk. Brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Looking for that safe, predictable, consistent 1% per week. It is July 1st, the very first day of the third quarter. Wow, half these is gone already. Let's just jump right in, see where we are, see where we're going, see what's going on. Let me see. This glasses make this thing better? Nope, I can't read. I can read it now. That's weird. All right. Dave wants to look at Macy's. Hold on a second. Dave. Where can I find the calendar that you use? Inspire me more. This right here, what I look at, is on Thinkorswim. Okay, Thinkorswim, you just go to Google, Bing, whatever search engine you use, just look in Thinkorswim.com, and then you just download it onto your computer. I like the download version rather than the online version or the mobile version. The mobile version is really just congested as hell, and then so much information. And then the online one is not as good as the one you can download. That's the one right here. Okay, the calendar is right on one of the first tabs. You go to where is it? Okay, your first tab's right in the very top of your screen. Very first tabs. It's going to be monitor, trade, analyze, scan, market watch, charts, tools, education, help, blah blah blah. Go to the market watch. Next line down will give you quotes, alerts, visualize financing rates, and calendar. I always leave mine set up like this. Every time I log in, that's all I see. That's all I want to see. I don't want to see all that other crap. Okay, we're going to take a look at Macy's in a little bit for, what's his name? Dave. Uh-oh, I missed some questions. All right. I can't see all these. All right, we're going to look at Macy's. Macy's. Apple is my weekly cash flow since 2020. Dirk Ziegler, we should chat. I'd like to hear your strategy. Okay? Don't get me wrong. I love Apple. I had to drop Apple because Apple was only giving me 4% a week. So I had to drop Apple and get something a little better. Okay. Tough day today, James. And actually, a sign last 30 days. All the regulars got whacked today. Oh, my goodness. Secretary, we're going to take a look at that. It was funny that you mentioned that. So I opened up one of my accounts and I'm thinking, Dell's already in the money for me. So all it has to do is just stay right where it is. And the other three, I haven't even traded yet because the numbers didn't look good this morning. So I'm waiting until tomorrow morning. So sorry, Secretariat, but the four positions that I have, well, three of them I didn't do anything today because I didn't like the numbers, but one of them seemed to be fine. So I don't know. We'll take a look at that because I'm kind of curious. What is she talking about? Right? So let's get a gander and start out with Macy's. I like Macy's. Macy's. What game is this? What game is this? Ooh, this is trading for weekly. This is dividend investing for weekly cash flow, where I show people how to get a safe, predictable, consistent 1% weekly return on their money. Now, the strategy I came up with was for my daughter, who's 9 years old. Now, she wasn't the brightest bulb on the tree. She wasn't a Mensa student. She was just your average, everyday, normal preteen girl. Okay. Now she wanted to learn how to trade because that's what Daddy was doing. So I had to come up with a strategy that was simple. It had to be simple, safe, predictable, consistent, and no way that she could lose. Because we all know if a 9-year-old little girl lost a lot of money, she would start crying, and then I'd hear it from mom too, so I'm getting it from both ends. So it had to be simple, safe, predictable, consistent, and no way to lose. Those are the 5 criteria I had to come up with. So, simply put, because I like that simple thing, number 1, rules, 5 rules. Never buy something you do not want to hold long term because you just might. Okay? Now, the longest I've ever held anything is 9 months. And it was a perfectly wonderful company. I I got 3 dividends, 20 premiums, and I ended up the year very nicely last year. Simple, safe, predictable, and consistent. No way to lose. Rule 1, never buy something you don't want to hold long term. I mean, you do want to, that you don't mind holding. Okay. Something that you don't mind holding. Never buy something you don't understand, or don't get sold on something that just doesn't make sense. It has to make sense. Okay. Never buy something you don't want to hold long term. Never sell at a loss. And defeats the purpose. Make sure the company has a minimum of 20 years of increased dividends, because absolute worst case scenario, when the stock goes down, and don't kid yourself, stocks only go up, stocks go down. So 20 years of increased dividends. So when the stock goes down, I'm still guaranteed an increasing return on my money. Even though the valuation of the stock might go down, my rate of return continues to stay the same or goes higher. I'm talking about the dividends. The dividends is your portion of the profits. And if we stick with companies that only have 20 years or more, okay, there's a lot of them. There's over 300. Okay, and if everything looks right, that 300 is more than enough. Wait till you see how it all unrolled. It's really cool. It's really simple, safe, predictable, and consistent. It's really okay. Anyway, so 20 years. Okay. 4, make sure it has weekly options. Why weekly options? Well, weekly options allows me to get a paycheck on a weekly basis. Okay, now you've heard the intro of all my videos. Hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. If you look, the 10-Minute Trader has been online for over 15 years. It is designed to do this trading strategy for 10 minutes or less a day. It's really not complicated, and people try to overcomplicate it. It's really not complicated. The funny thing is, it just freaking works. Okay, so never buy something you don't want to hold long term. Never sell at a loss. Make sure it's 20 years of increased dividends, weekly options, and most importantly, make sure the numbers work. What do I mean by that? Well, we all know what this is. Okay, this is your tells you all the information. Damn it. Trade grid. There you go. Wow. Trade grid. Last price of today. Okay. The bid. That's what I can sell my stocks for tomorrow. This is the ask. If I want to buy it, this is what I'm going to buy it for. So sell, buy. Bid, ask. The volume, 11 million shares today. Opened up at 10, high 1048, blah, 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 all that kind of nice fun stuff. Okay, so but here's the numbers. This is what I'm talking about. That's the trade grid. Tells you all the numbers. So if I'm buying it tomorrow morning at 10:44, okay, not 10:44 a.m., $10.44 per share. Okay, I want to sell it to someone the closest to the money as possible. My God, those premiums are horrible. You see those? That's the horrible. 10:44, the tens are going for 23 cents. You're losing 44 right off the bat. It's like you have to pay them to take that position. That's horrible numbers. What the hell were they thinking? That's Paramount. I'm looking at the wrong stock. I'm supposed to be looking at Macy's. Macy's. Here we go. 1831. Okay, yeah, those are just as bad. 1831, it's going for 41 cents. I'm losing 31 or after top means I'm walking away with 10 cents on an $18 stock. Okay, that's a little bit over 0.5%. 0.5% is still over 25% per year. And we do have that half week. I mean, not a full week this week. What about AB or Whirlpool? What game is this? What game is this? It's not really a game. This is my last page. Okay, we're on a new week, new page, fresh page. See what you guys can give me this week. All right, let's take a look. AB and Whirlpool. Whirlpool, cool. Yep, Secretariat. I might have to tend to believe you. Macy's, and that other one didn't look very good. Hi, James. I'm getting closer to paper trade. Cool beans, Dave. Duke Energy, huh, Al? Or is that all? Okay, guess Al. Think or swim. You generate lists of stocks. Then show the calendar. Yep. Macy's. Took it on the chin today, and I couldn't bring myself to sell today. Ah, Secretariat. Well, ooh, yeah, take a look at that. All right, let's take a look at Macy's. Well, I don't really like the numbers. Okay, 1831. The 1850s going for 8. What is that? That is so misleading. That is. Take a look. It's misleading. Because 1831 is the purchase price. And if you're selling the 18s, okay, you get 41 cents. You subtract the 31 that you're losing, you walk away with 10. So 10 on an $18 stock is less than 1%. But look at the 1850. The 1850, you get the difference between, well, when the stock goes up, you get the difference between the stock price, 1831, and the 1850, which is an additional 19 cents on top of the 18, because the 18, it's 18 to 22. So you probably would be able to get 1% out of this one trade if you did the 1850, not the 18s. It's usually the 18s are usually a better deal, but in this situation, it's not. But anyway, always check the numbers. That's why rule number 5 is do the numbers work. So am I getting my 1%? Well, apparently the 1831, so the 1850s, and then there's my, there's my 1%. Okay, great. Let's take a look at the chart. Now, she did have a down day today, but what is that telling us? Well, we're looking for 5 things. You can see 5s a lot. There's a lot of 5s. 5 things: the high, the low, where it was, where it is, and which direction is it going. That's the 5 things we're looking for on the chart. Now, you can look as many charts as you want, but it's always the same thing you're looking for: the high, the low, where was it, where is it, and which direction. See, it goes. This is January. I'm not January. Sorry. This is 52 weeks ago today. This is today. Oops. Right here is today, 52 weeks ago. So from here, 52 weeks ago to today, within a year, she's in an upward trend. Simple. Now, let's go to the last 90 days. We could go 6 months, 4 months, whatever. 90 days is just an arbitrary number. All right, so for 5 things: high, low, where was it, where is it, what direction is it going? So now it's in a downward trend in the last 3 months. So for the whole year, it's in an upward trend. Okay, all it means is a year ago to today, going up. Now, last 3 months, she's a slight bit sideways. Okay, no, sorry, a little bit on the downside. All right, so great. Now I want to look at the last 30 days. Now, the last 30 days is going to give me the best insight, in my humble opinion, most humble opinion. Okay, my most humble opinion on where it's going next. Okay, so we see what it's done in history last year, then the 6 months, the last 90 days. Now look at the last 30 days. Good. So what is the thinking of the buyers and sellers? That's you and I. We're the buyers and sellers. What's our thinking? Well, here we go. 30 days ago, 30-day high. 2 days later, 30-day bottom. I love bouncing off of a 30-day bottom. Okay, she shoots up, she pulls back, shoots up, pulls back. 1825, it was low today, but guess what's going to happen either tomorrow or the next day? It's going to find that bottom, because look at it. Here's the bottom for the last the last month, the last 4 weeks. Okay, down, up, down, up, down. It's either going to go a little bit further down or it's going to go back up. So if you don't have it, I wouldn't do it until it finds the bottom, and it may be tomorrow, maybe the next day. It may be today, because tomorrow she may go up and then keep going. But eventually, it's going to turn, because that's all they do. Stocks go up, they go down. They go up, they go down. I've never seen a stock that paused and say, hey, hold on a second, I got to go wash some dishes. No, stocks don't do that. Stocks go up, stocks go down. That's all they do. Okay, and this pattern is pretty easy to see. Down, up, down, up, down. Okay, now it's either, as soon as it finds its bottom, tomorrow, the next day, or the next day, or the next day, then she's going to go back up. And now, this is like one of the few times I've ever not had Macy's. Okay? Now, I usually always have Macy's. because Macy's. Wait a minute, do I? I don't think I do. No Macy's here. No Macy's there. Well, so much for that. Ants Man. Okay, somebody wants to be invited live. Shuhana Sava. Okay, dude, sorry, I don't know who you are, and we've never had a conversation. So if you really want to talk live, I have no problem with it whatsoever. In fact, I encourage it. I always like to hear what people have to say. But if I don't know who you are, it ain't gonna happen. All right, so anyway, I like the numbers. Okay. If I can get my 1% tomorrow morning, okay, 1831 to 1850s. If I get my 1%, great. I want to see if there's going to be, if I'm going to see if there's going to be at the bottom tomorrow or if today's the bottom. But I want to keep my eye on this one this week. Okay, so you guys, this is one we want to keep our close eye on this week. I love Macy's. Macy's has always been nice to me. All right, Ants-Man said hi. Ants-Man, question, sure. Ben today, 9 months is long term. Yeah, sorry, Bandy, 9 months was that's the longest I've ever held anything. I'll be sleeping if you don't talk. Macy's soon. Where did Macy's? Do we gamble on Chewy? Nope. I don't like Chewy at all. It's too new. James is tired. He must be doing good. Partying hard this summer. No, actually, I was at my mother's house doing landscaping. Then me and my grandson went in the pool twice. We watched a Disney movie. We fell asleep. All right. Anyway, did you realize it is important to read the numbers on the screen? Right. Did you realize that? Okay. The VIX is low. Okay. AGNC. Uh-oh. I'm missing some questions. AGNC. Hey, Doc, let's look at Procter and Gamble. Hold on. AGNC. I think we looked at it this morning, didn't we? AGNC and Procter and Gamble. Procter and Gamble. Is WFC is good dividend stock or any banks in general? We'll take a look at Wells Fargo in a little bit. WFC. Bro went from Grandpa to Jordan Belfort. I don't know who Gordon Belfort is. Wait a minute, Jordan. All right. Can I zoom out? What am I zooming out on? Armstrong. This screen here is live on YouTube. All these little tiny numbers, okay? You can see them live on YouTube. So you can sit in front of your big screen TV or your laptop, your handy dandy computer. It doesn't work very well on smartphones or mobile tablets because you can't really zoom into these tiny numbers. All righty. Inspire Me is everything that you look at on Thinkorswim or other applications I should install. The only thing I ever will do is Thinkorswim because it has so many perks. There's so many perks in this. I can't call it a software because it's not software. It's a trading platform. And it's through Charles Schwab. So, it is what it is. Thoughts on ServiceNow. I have no idea. MagPro, I have no idea what ServiceNow is. Okay, I only look at stocks by the ticker symbol. Sometimes you can give me a company name. I'll know what the stock is right off the top of my head. Nike, Ben, we'll take a look at Nike. I actually have some Nike. NKE. I love that drop. I didn't see what it finished up today, but I saw it opening up this morning. Stocks and options half day Wednesday. Cool. I just grabbed 5,000 shares. Okay. 193 dividend, down 30% on the year. Ben, you have to tell me what stock symbol it is because I go through the questions so quickly. I don't always remember what our conversation was. Sorry. Nike. You bought Nike and sold the option the same time today. No, I did Nike Monday. Wait a minute. No, I did Nike on Friday when it dropped on Friday. No, we're going to talk about Nike in a little bit. Let me go. Let me catch up on the questions. I only got 4 more to go. Can you check out Now? I don't have no idea what the heck Now is. Is that the stock you're talking about? NOW? Never heard of them. Okay, we're going to take a look at Nike. 1 second. Show us what you've bought and sold last couple of weeks. Mikey, funny you should say that. Hold that thought for a second. Oh, I don't know. Wait, damn it. Hold on. Shoot. I don't, because I was working on the website today and I uploaded all the, yeah, it's not, I didn't hit the wrong damn button. All right, it'll be available tomorrow. Sorry. Or later on tonight. Yeah, I always update all my stocks from the beginning of the year. Okay, and earlier this afternoon, I was uploading all the pictures and aligning the web pages because we got a new website now. It's being transferred over, and it's a little bit of a crossing the T's, dotting the I's type scenario going on. Okay, but maybe tomorrow or next day you'll be able to look at everything I've bought since the beginning of January till today, and the up and the what do you call it? The percentages for each week. Yes, Now. Okay. All right, well, let's take a look at it now. NOW. That's a no. For me, okay, it's $788 a share. So however much money you think I have, I don't. But let's go through the numbers anyway, just in case you do. All right. So 788, I'm going to be looking at the 790s, which is going for 710. So there's plenty of profit there. The 785s, $10. Yep, plenty of profit there also. But I got a minor problem with it. Same thing, I have a minor problem with NVIDIA. Take a look at this chart. You're at a high, okay? High of the year. You honestly think it's going to go higher? Fine, buy it. You don't make money in the stock market by buying high and waiting for it to get higher. You buy low and then sell high. But that's not what I'm looking for, okay? I'm looking for long, no long. I have no idea, Ben, what no long means. Close to all-time high. Yeah, I get that. So let's check out a few other things about Now. Okay, finance. Yep, just waiting for it to load. 1 year target, 859. Cool beans. So I think I already have the well. I already said no one. So see how many more times I can say no to this thing. Wow. So let's see if I can get this right. Okay. Okay. Wait. There's one more tiny bit of information that I want, so I can really give you my opinion of this so-called merger. Okay. All right, I feel a little bit better, but not huge. So here goes. You ready? This is my take on Now and NVIDIA and the merger. This is really quick, and it's all directly by the numbers for the trading strategy in which I do. Now, I'm not looking for capital appreciation. The mergers between these two companies, it may go through the roof. It may continue. I don't know. I personally don't care. It's not in my atmosphere. It's not in my realm. It's not what I'm looking for. Okay, so here's the thing. NVIDIA a couple of weeks ago was at $1,200. They did a 10-to-1 split. Great, fine, dandy. But that's what they didn't tell you. When that stock was $1,200, the book value was $2 a share. Well, now they did a 10-to-1 split. The stock is still worth $2 a share, because you liquidate the whole company, everything the company owns, the asset value. You take it to the yard sale. You have an auction, whatever you want to call it. The book value for NVIDIA is $2 a share. Check out what the dividend is. The dividend on NVIDIA is 1 cent. So explain to me in a manner which I'll understand. Okay? Company doesn't pay dividends. How the hell would I look at it? The company's numbers are outrageous. I haven't seen anything like that since the gold rush of the 80, was it 79, 80? Okay, I don't know if any of you guys remember that. It took 30 years for those people to break even when they bought gold at, I think it was 850, something like that, back in the early 80s. So anyway, and now this company, at least this company has a book value of $39 a share. Okay, but think about it. Okay, the stock price is $788 a share. The book value, the actual book value is $39 a share. And they have no dividends. So you get a company that's $899 a share, merging with a company that used to be $1,200 a share. One company dishes out 1 cent for dividends, and the other company doesn't pay any dividends at all. And I'm supposed to be happy about this? Sorry, I'm at that point in my life where I want safe, predictable, consistent 1% per week. That's what I want. Neither one of those companies come onto my list. If the stock slips sharply, then slowly climbs back up, causes a loss. Yeah. Okay, what percentage of your investment do you think you should follow your strategy? Okay, Mikey, 98% of all of my money, all of my money is invested at all times, because I've been doing this for 20 years and I know what I'm doing, and I don't want to sound cocky or anything like that, but just see if it makes sense, okay? Coca-Cola, Procter & Gamble, Colgate-Palmolive, Bank of America, Wells Fargo, U.S. Steel. I can go on and on and on. These companies are over 100 years old. They've all consistently increased their dividends to their shareholders for the last 2 decades or more. Some of them as much as 50 to 60 years. Okay? If a company can go through what we've been through in the last 20 or 30 years and consistently be profitable and consistently increase their shares, the share of the profits to their shareholders, well, I'm not thinking it's that huge of a risk, but that's just me. So I have no problem with that. If I have 2,000 shares of now, feeling good about it, well, awesome for you, buddy. Like I say, this is not for everyone. Okay? Seriously, it's not. It's slow. It's boring. It's boring. It's the same stocks over and over and over again. But here's the thing: if I pick with good, decent companies, and only good, decent companies, and just rotate them, kind of like a revolving door or a merry-go-round. Jump on the merry-go-round, grab the brass ring, 1 penny, 1%, jump on out, and then do it again the next week. Week after week after week, 1% per week. That's over 50% per year, and it's less than 10 minutes a day. It was a trading strategy so simple, it was created for a 9-year-old little girl. Not to say that they're different than 9-year-old little boys. I'm just saying. 9 years old, and she was trading stocks and getting an average of 5% per month, which is kind of good, because back then we weren't doing weeklies. We didn't start doing weeklies until just recently, because I was afraid of weeklies until I started doing some research on them. Then I said, hold it, I can implement the strategy I created for JC with this tiny, tiny little twist and pump up the volume on pump up the volume on the profits and cut back on the amount of time I'm into this thing. Well, fine. All right, anyway, back to the how, now, or whatever you want to call this. It's a no. NVIDIA is a no. It just doesn't fit into the parameters of what I am doing. And I'm old school. I am so old school. I write stuff down. I do. Take a look. Filled. Every day I just write stuff down, because I don't believe in all that new stuff. Because eventually you hit the wrong button, everything's gone. So I write things down. WBA is drowning. Is it going to survive? I read an article on it today. I think they have 8,500 stores nationwide. They're over 100 years old. Okay, yeah, they're trimming the fat. Okay, because I don't want to get into politics, but number one, current administration is not prosecuting theft. They can steal $1,000. $900 not get prosecuted. Okay, 2, government is giving away money for free. People don't want to go to work. They'd rather just stay home and collect assistance from the government. Fine, nobody out there, nobody's working. So these stores are lacking. The biggest generation ever on planet Earth ever. The baby boomers just retired. There goes a whole workforce done and out of the way. So who's going to replace them? Us Gen Xers, there's just not enough of us. The millennials, they don't want to work as much or as hard as the what do you call it? The baby boomers and the Gen Xers, where we basically built the world that you guys live in, but you guys don't want to pick it up and take it over. I'm divorced myself from WBA this time for good. Took my loss and happy about it. Secretariat. Okay, absolutely, you could be right. You could be, and that's it. Because when it's, let's actually pull it up because I like WBA a hell of a lot better than I like now. All right, so she dropped again today. All right, so here's my take on it. Okay, it's either going to keep on falling because we haven't found the bottom yet. I'll watch WBA from the sidelines. Too risky for me. Hey, you guys already know that I'm into Walgreens, so I'm not going to deny it. If I lose, I lose, and I'll tell you. But at the moment, I bought some as soon as she dropped on Thursday. I bought some. I'm optimistic. I'm thinking, oh, this is the bottom. Great. Apparently, it's not the bottom. Okay, because Friday, Friday was up. Today was down lower than Friday. No, we'll find out. Okay. Now, the article that I read today about Walgreens, they are closing some stores. They get 8,500 trim the fat. Okay, fine. All right. But they didn't disclose how many stores they're closing. So we don't know. Any info on JEPI would appreciate very much. Kearney, dude, you don't want my opinion on JEPI. Sorry. JEPI is just a no. It's. Wait a second. We only got 6 stocks to take a look at, so let's jump on JEPI and just kick them for a little bit. JEPI. Now, this is one of the reasons why I don't like JEPI. Okay, number one, it's a monthly. The numbers on monthlies just don't work as well as they do on the weeklies. Okay? It's simple math. There's only 12 months in the year. Okay? I have to guess where the stock is going to be in 4 weeks. Okay, those numbers just don't work for me. Let's take a look at weeklies. Weeklies, I can do 52 times a year, and I only need to figure out where the stock's going to be in 5 days. So it's just a mathematical problem, and the answer is simple. Do it 12 times a year. You're going to get 12 checks, okay, regardless of what the percentage is. Okay, whether it's $1, whether it's $50, but you get 52. You get 12 of them doing it here. If you do weeklies, you do 52 of them. Here, I have to guess where the stock's going to be in 4 weeks. That's 20 days away. Okay? Weeklies, I can do 52 checks a year, and I only have to figure out where the stock's going to be in 5 days. And the returns, 50% for weeklies, 24 to 25 for monthlies. So everything just leans in that direction. Okay, so that's reason number one. I don't like JPI because it's monthly. 2, let's really kick on JEPI because I like to. Now, my take on JEPI, right? It's an ETF. Okay. Now, someone got a little upset by me saying electronically traded fund, and they say no, it's exchange traded fund. I said, oh, well, that's different because the exchange is computerized and computers run on electricity. So it's not electronically traded fund. ETF, you call it whatever you want. ETF. I don't like them. Why? I'm too lazy to do anything with my money here. You do it. No, wait a minute. No, let's give it to a computer. Yeah, right. Okay, summary, JEPI. Take a look. 7.3% for the year. You're giving your money to a machine. The machine is getting you 7.3% of your year. Hey, if you're good with that, fine. Okay? But I'm trying to show you a simple, productive, consistent way of getting 1% per week. That's 52% or higher per year. So again, I wasn't a college student. Math was not my big thing, but I do know 52 is better than 7.3. Call me crazy. Parker Hannafin. Ooh, that's a nice one. What's on my favorite weeklies? Well, so far it's been Walgreens, Nordstrom's, Macy's, Kohl's, um, Wells Fargo, and a couple others. I got 1,000 shares of Walgreens. I think the price is great. Going to buy more. It'll make the change. Mark. Okay, now we looked at Walgreens a little while ago. WBA. Okay, now just my humble opinion. Don't get me wrong, because as soon as I saw it drop, I bought a bunch too. But take a look. You got 3 days to the downside. It's still going down. Okay, you're trying to grab a falling knife. Let it fall. Let it hit the floor. Let it bounce. Then jump in. That's just my humble opinion. I'm not telling you to do that. Anything I say, I think you all should just think about it and do your own research. But I'm reading the numbers from the monitor online. Okay, you can get these numbers anywhere. They're the exact same no matter where you go. The last traded price of the day is the last traded price of the day. You can check it anywhere in the world and it will all be the exact same as you see right here. You can even pull it up on your phone. What did Walgreens close at today? 11:58. Then you fill out all the questions for these and they'll all pop up. So I'm just reading them. I just got 200. Well, all right. Nothing wrong with that. Your residents, good evening and how are you today? All right. So that's Walgreens. And I did pick on JEPI. I'm sorry, but electronically traded funds or exchange traded funds, whatever you want to call it, it's just giving up your responsibility to your own money. Okay, it takes less than 10 minutes a day. You're going to take more care for your money than a machine would or someone else would. Okay, that's just my opinion. Okay, there are people that just don't want to do it or think that they can't do it. It's really not that difficult. If a 9-year-old girl can do it, anyone can do it. I mean, I'm so stubborn in my ways. I stick to it. I stick to it exactly the way I created it 15 years ago. Because I'm from that old school. If it ain't broke, don't fix it. Okay, Trip Talk. Trip Talk, let's take a look at Nike. Because we were talking about Nike earlier. Thank you, sir. I'm excellent. Hope you are as well. I had a lovely day today. I did some landscaping over at Mom's, me and my oldest son. It was kind of nice. Out there chopping down trees and clearing brush. Anyway. Oh, we're looking at Nike. Nike. Nice. I like that because I do have some Nike. Now, it's a gamble. Anytime a stock drops like that, it's a gamble. But there's always something behind it. Simone, how are you doing today? When you sell a call option, your goal is to get rid of the shares. That's absolutely correct, Simone. The main focus is the premium you collect when you sell the call option. Okay, so here's the stock price on Nike, 76.79. If I bought it first thing tomorrow, 76.79, I'd probably sell the 77s, which are going for 88 cents, which is more than 1%. You guys want to figure out where I come with the 1%? There it is. Nike's a good company. What's this? Now you can ask yourself a question. And I gave this presentation the other day. And I don't like doing it because it just goes to show how much we're really screwed sometimes. Now we're looking at Nike, okay? See? Nike, Nike. Here she was over a month ago. Moves up, moves down, moves up, moves down. Look where she is right here. And then all of a sudden, from 94 all the way down to 74. Why? Because they got a bad report? So let me ask you a question. Okay, when you're in yeah, when you're in elementary school and you get a bad report card, what happens? Oh, not a whole lot. Well, probably get grounded, punished, blah blah blah, whatever. But when you're in high school or college, when you get a bad report, a lot bigger different. But did the sun also set that day? Did the moon come into the sky? Did the tides come in? Tides go out? Did the wind blow? Did the birds sing? Yeah, life goes on. It doesn't mean squat, but who profited from it? Now, if you know anything about trading, okay, this is a lesson. Last traded price, we already discussed this. The last traded price. The bid is what I could sell it for. The ask is what I could buy it for. How many shares were traded, the open, the high, the low, the close, all that information is right there. But pay attention to this. The difference between the bid and the ask. The bid and the ask. 76.72, 76.79. That, my friends, is a 9-cent difference. You don't think it's a big deal? Well, let's go to the chart and I'll show you just how big of a deal it is and who actually made all that money. Doesn't sound like much money now because you don't know what it is yet. Hold on. But you do know it's 7 cents per share. That much you do know, 7 cents per share. Now, we all know this is the chart. We all know this is the dates. These little blue numbers, these little blue lines right here, they used to be bigger until this one came in and dwarfed them all. Okay? But if you look, that blue lines represent the volume of shares traded per day. So the volume of shares traded per day, okay, is an average of 5.7 million shares. Now, get this. Remember that 7 cents we talked about, the difference between the bid and the ask on the stock price? Well, how much did I say it was? 7 point something. Okay, let's just call it 8. Okay, 8 million. Oh, yeah. Wait a second, right there. Okay, 11 million. About right. Okay, so 11 million shares. All right, 11 million shares on average. Okay, on a daily average, 11 million shares. Now, the market maker, he's the one who does the buying and the selling. Now, some companies only have one market maker. Okay, some companies have two, some companies have more. But the market maker made 7 cents per share. Okay, and 11 million shares were traded on average. So let's do 11 million. Whoops, 11 million. Okay, so on average, over the last month and a half, the market maker made $770,000 a day. Okay, that's at a 7 cent spread between the bid and the ask. Okay, so what happens? Think about this. It's at 94. She drops $20. And what happened to the volume? It went from 11 million shares average daily volume is that 100 to 129 million shares on that one day. Why? Because the market maker got some news, got a little piece of paper, a little fax, or a little email saying something went on in the company, or some kind of rule was breaking, or some kind of a lawsuit settlement, or whatever happened. I don't remember what it was. I do remember reading it. That's what happens when you get too much stuff in your head. I do remember reading it. Nothing major. Okay, it's not going to hugely affect the company, but it was news. So what happened to the news? Doesn't really matter, but the market maker manipulated it to a point where the market maker took it upon himself to say, you know what? This news, I think I'm going to drop it down to, what did he drop it down to? 75. Okay, just because he could. You got the news, say, wait a minute, let me see if I can manipulate this, because daddy needs a new Lamborghini. So this is what he does. And 129 million shares. So instead of making $770,000 a day, okay, you take that 7 cents. Now you multiply it by how many shares was it? 129 million shares on one day. So his income went from $770,000 per day to $9 million a day, just because he took whatever that news was and he dropped the price. Because does the stock price have anything really to do with the company at all? No. Stock price is only the public's perception of the value of the company. So you get some bad news. What's going to happen? Well, you dust yourself off. You keep on trucking. What happened to ExxonMobil when the Valdez dumped all that oil up in the Northwest? Okay, their stock plummeted. Okay, what happened to British Petroleum when they sprung a leak in the Gulf of Mexico? Their stock plummeted. Okay, so it's the pump and dump. Yeah, you like that. So anyway, the companies, Exxon and British Petroleum, have both recovered from that. Nike's going to recover from this little glitch. Look what happened to 3M at the beginning of the year. They recovered from that. Look what happened to Johnson & Johnson, that big, huge lawsuit. Well, they split the company, deflected some of the, liabilities, but the company still went on. You get a black eye, oh, go away in a little while. Same thing here with Nike. Okay? Eventually, this gap will fill. But who walked away with all the money that day? The market maker walked away with $9.03 million for one day, just because he took whatever information that was that he received this day, and he's the only one. The market maker is the only one who knows what the stock is going to open up the next day. That's a lot of power for one person. Okay? It's huge. But look what he walked away with that day. And eventually the stock will retrace. Okay? Well, what does the market maker care? It's Nike. It's not going anywhere. So he gets a little bit of banged up and bruised from whatever. Anyway, I think that's funny, though, because people think, bad report. This is actually what happened in the company. Oh, no, the earth swallowed up 3 of their manufacturing companies. So now they have to decrease the production. No, it doesn't work that way. You get bad news. It's like, oh, go to the principal's office, stand in the corner or whatever. UNH hack. All right, Alex, Tesla pump or dump? PM. All right, Alex, I don't do Tesla. Okay, there's a reason why I don't do Tesla. Tesla doesn't pay dividends. Okay, so they may be a great company. Elon may be a great guy, but he's not sharing his profits. So why would I put my money into a company that doesn't share the profits? I'm not looking for capital growth, and I think I've already said that. So if you guys are here looking for capital growth, Miss Trumpy, Chevron, huh? I'll take a look. If you guys are here looking for CVX. If you guys are here looking for capital growth, you're in the wrong place. Question on Instagram. Cool t-shirt. Do you have a good site room recommended where I can create my own print? You know what? You can clue me in on that one. I'll create one. That'd be cool. Or is he just greedy? Well, you know what, Tyler? It's a total different world. I mean, if you've seen some of the movies that have anything to do with the stock market, and they actually show you what the floor looks like and what actually goes on there, the madness. I mean, yeah, they're all the same way. So you get yourself into a situation where you get a piece of news and you have control of that news to do whatever you want. As a market maker, that's a lot of power. So, maybe he woke up this morning and say, damn, another divorce. Well, I need like up $100 more million to pay this one off. I have no idea why the guy needed the money. Just saying. He could be greedy. That prenup may not have worked, and now his ex-wife's taking half of everything. But especially Elon, considering he hasn't really taken a salary. Not a fan of him. Okay, Tyler, I don't know the guy. I've heard him talk. I like what he has to say, but I can't really say one way or the other because I don't know him. But whether he takes a salary or not is irrelevant. The company doesn't share the profits. I mean, the company's been growing. Look at the shares of stock. They just keep going up and up and up. I'm not looking for that. I'm looking for a consistent, safe retirement. Ooh, what the heck was that? Retirement plan for myself. Okay, and I'm just sharing what I know and what I do. And I don't know what my drink is. Hold that thought. Freaking dogs. Thank you. All right. Sorry about that. Honey soothes my throat. I'm not used to talking so much. What did you buy this morning? I don't. I think I bought. Did I buy Dell this morning? Or did I buy Dell? Yeah, I think I bought Dell. In and out of Dell real quick. You know what? Let's bring it up. Dell. Oh, wait a minute. Oh yeah, we did Nike. All right, let's check out Dell. First thing I always want to check out before anything, before I even go any further, is what is my possible profit going to be? Master Trumpy, yeah, it is written down. Okay, Chevron. We are going to look at Chevron a little bit later. I write them down. Say this is this week's. This week's. That's today. Okay, we will get to it. Why invest in an asset for dividends, taking on risk for such a little reward? Ooh, Andrew. Andrew, I don't consider as risk. So let me see if I can just enlighten you just a smidge to my way of thinking. All right. I'm 60. I want a safe, predictable income. Okay, we already know that, right? I have a certain amount of money to play with. We all know that too. We all have whatever we have. Now, I'm looking at investing 10 minutes of my time on a daily basis to make a 50% per year return. Now, if 50% per year return for 10 minutes a day of your time is not enough for you, this might not be the right place for you. But hear me out. The only stocks I buy are stocks that I would not mind owning for a long period of time. As a matter of fact, let's take a real quick look at one of the lists that I consistently pull from on a weekly basis. Okay, I'm just, let me go back a little bit. Let me just read a few of these to you, and you let me know if these are halfway decent companies or not. All right, T-Mobile, Kraft Heinz, Bank of America, General Motors, Occidental Petroleum, Hewlett Packard, Boyd Gaming, Coca-Cola, Paramount, Mondelez, U.S. Bank, American Express, Bristol Myers Squibb, Globe Life. Tell me which one of those companies there is a waste of time. Because I want to give you the benefit of the doubt. You know, if you're saying what I'm doing is such a measly little reward, explain to me which one of these companies is not qualified to own under your humble opinion. Okay, so that's just some of them that I do. So basically, I just buy the stock. Or is he just greedy? I saw that. AAL. Sorry, I missed a couple of stocks you guys recommended. Andrew, okay, why? And taking a risk. I don't find it to be a risk whatsoever because most of those companies, um, Kraft Heinz, over 100 years old. Bank of America, over 100 years old. General Motors, over 100 years old. Coca-Cola, over 100 years old. Paramount, over 100 years old. U.S. Bank, over 100 years old. American Express, that I don't really know. Bristol Myers Squibb, over 100 years old. Globe Life, over 100 years old. So here's the thing. If these companies that I invest in and get 1% per week is a huge risk, they have seen World War I, World War II, Korea, Vietnam, the Great Depression, stock market crash of 1919, the stock market crash of 1987, the stock market crash of 2008, again 2021, Afghanistan, Iraq, Iran, the Bay of Pigs, the oil embargo, the dot-com bust, all that crap. And they still consistently increase their dividends. Explain to me where the risk is there with those companies. Seriously. And 1% a week is over 50% per year. And I'm only giving up 10 minutes a day of my time. That's less than an hour a day. That's what the strategy was created for. Simple, safe, predictable, consistent, no way to lose. The 5 rules. Never buy something you don't want to hold long term. Never sell at a loss. 20 years or more of increased dividends, weekly options, and make sure numbers work. So, I say again, young sir, explain to me where the risk is and where the profit is so little for the amount of time I'm giving up. Okay, 10 minutes a day for 50% return. Now, let's say, hypothetically speaking, I have a $100,000 account. 1% a week is $1,000. $1,000, if I'm doing 10 minutes a day for 5 days, that's only 50 minutes. So let's say we're doing an hour a week for $1,000. Okay? At the end of the year, that $100,000 count gives me what, 50,000, 52, somewhere in that area. Okay, all my trades for this year are posted up online. The link will be ready tomorrow. I am well over 1% per week this year. I had one loss so far, and that was, oh my goodness, Albemarle this year. That's it, 1 year. Half the year gone, only one loss, and that was Albemarle. What's a good investment now? None of your business. Interesting name. That's his question. That's his name, whatever. Okay. Honestly, I can't tell you what to do. You have to figure out what's right for you. I'm just showing you what I do. I don't give recommendations. I'm not an analyst. I'm not a financial advisor. I'm basically a nobody. Just a guy who got sick of being screwed by the big guy and say, hey, this works. My daughter wanted to learn how to trade. So 15 years ago, I taught her. Okay, safe, simple, predictable, 1% per week. Does it work all the time? No, it doesn't, but it averages over 1% per week. Okay, so let's finish up. What are we doing now? ADM. ADM is a no. It's always been a no and probably always will be a no. ADM. Now, why am I saying no to ADM? 6097, 61s, well, going for 25 cents. That's not even 1/3%. But that's not the reason why. ADM. Look at that. ADM has a yield of 3.3%. 3.3%. What I want to see is how often have they increased their dividends. I think that's where they come up short. Oh, interesting. Okay, so we can't really count this because it's pre-stock split at 1 cent. Let's go from here, from 94, goes from 4 to 8, to 5, 6, 8, 10, 12, 16, 18, 19, 21, 32, 34, 35, 37, 40, 45. Interesting. Okay. The AMD or ADM, that's a no. Well, let's figure it out. Yeah, I don't like the yield, number one. So they do have increased dividends, but not consistently. Okay. They are increasing. It's not increasing every single year, but it is increasing enough to make it worthy. 1, 2, 3, 4. 1, 2, 3, 4. Wait a minute. Am I reading that right? Wait a minute. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. Yeah, so they are doing it every year. Okay, great. So it must be AMD. ADM. Anyway, let's go look at the chart. Oops, wrong one. Okay. ADM, $60.97. The closest strike price is going to be the 61. Here's the 61. It's going for 25 cents. It's not even 1/3%. Okay, a year ago, we're 87, bottomed out at the end of January around the $50 area. Okay, now we're sitting at $60. No big, huge movements that we see. Okay, last 90 days. Here we go. Last 90 days. Look at that movement. Okay, up, down, up, down, up, down, up, down, up, down, up, down, up, down. Consistent. I like that. All right, so last 30 days. Okay. High, 30-day high, 30-day bottom. She shoots up, pulls back. She should be heading to the upside now. Should be, but they're only paying 1/3%. When you can get 5% interest with no risk. Hey, Andrew, I'm not really saying what you're right or wrong, okay? Ooh, let's do a quick math. quick math here, quick. Andrew wants me to stop what I'm doing so I can make 5% return on my money. So let's kind of curious. Let's take $100,000 for the fun of it. $100,000 will give me $50,000 a year, right? How much at 5% is it going to be to get $50,000? Well, let's find out. How much is 1 million? Whoops. Multiplied by 0.05. There you go. So here's an interesting question, Andrew. For me to make the exact same amount of money that I'm making now, doing it your way, okay, 5% no risk, right? I would need 10 times the amount of money that I currently have, which would mean I would have to go back to work because the amount of money I have now at 1% is perfectly fine for me, okay? If I do it your way and get 5% per year with no risk, I have to increase my nest egg by tenfold, which I'm 60 now. So how do I 10x my money from where it is now to get to a point where you feel comfortable that I should be? Interesting question. Okay. The money I'm making now at 50% ROI, perfectly fine for all my bills. To get that exact same amount of money, doing it your way, I need 10 times the amount of money that I currently have. And I don't know of any way to safely 10x my money to satisfy your desires of the way I live my life. Anyway, let's go on a different subject. Recon, haven't heard from you, buddy. All right, Recon. ADM, please, when you get a chance. All right, Hassan Pfeffer. We just looked at ADM. Okay, ADM is only offering, hold on a second, let's get this out of here. Okay, ADM is only offering 25 cents on a $60 stock, which is 1/3. 1/3. Okay, 1/3 is not bad, but I prefer 1%. What's a good to invest in right now? Education. When you get 5%, yep, okay. Andrew, here we try to get 1% or more per week. Hey, thanks, Wade. Recon, 1% a week, 52% a year. You know, and I'm agreeing with some people. Your opinion, the airlines, okay. If you buy for EX date, it's factored in the next trading day. Wow, Andrew, I may not look 60, but I've been investing for over 20 years. I know all this stuff. If you're going to really come at me with something, come at me with something I don't know, or something that's really going to make an impact on my life. Because apparently you seem to want to impact my life because you think I'm living my life incorrectly by gaining 50% per year for the past 15 years. You prefer that I get 5% per year and go back to work until I get 10x of whatever I need. Yeah, no thanks. I'm perfectly happy where I am. Okay, this might not be a place for you. So nothing to win. Nope, nothing to win. Sorry, dude. What do you think of Bitto? Ugh. Now, I have two positions in Bitto. Okay, neither one did anything for me at all this week. But this week is just starting. So the long-term plays for me. I know, long-term. In a different trading strategy, I don't go over it here. Here, I just focus on one trading strategy only. Bam, preach! Justin Davis, how are you? Yeah. Well, Recon, it just doesn't click for someone. You can buy the dividend, the stock takes a hit the next trading day. Andrew, you're definitely not listening to what I'm doing. So apparently, I understand what you're saying. Really, I do. Okay. Now, like I said, I've been trading for 20 years. I've tried a lot of different trading strategies. When my daughter was 9 years old in 2008, she said, Dad, can you teach me how to do it? So the criteria I had came up with, it had to be simple, safe, predictable, consistent, and no way for her to lose. That's the 5 criteria I had to come up with. What I came up with, never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has 20 years of increased dividends, weekly options, and then make sure the numbers work. Guess what, Andrew? It's been working since I created it for her in '08. Terribly sorry if you don't agree with 1%. Just keep your opinions to yourself if you don't have something nice to say, or if you're not going to contribute positively to the conversation. You can buy the dividend, buy the stock, takes you to the next. Yep, I know all that already. Which company do you recommend buy shares right now? None of your business. Okay, now I've tried to explain this to you before. Okay, I don't give advice. I just show you what I'm looking at. You can give me an idea what stocks you want me to take a look at, and I'll give you my opinion based on this trading strategy. Now, this has a lot to do with covered calls. It's one of the safest trading strategies there is because it just is. Okay. Antonio, what do you think about ARR 15% pays monthly? I doubt it pays 15% per month, but it probably pays 15% per year. Now, I prefer 50% per year, but if you like 15, more power to you. ARR. Ooh. It's a no because I don't like monthlies. That's number one. Number two, you got 5 days to the downside. You get your 30-day bottom here, 30-day top here, pulls back, up, down, up, down. It's going to find a new bottom somewhere around here. So keep your eye. If you really like it, I don't like it, but if you really like it, it's going to find a new bottom here, somewhere here. It may be tomorrow, the next day, the next day. Okay, but your 30-day bottom is right here. This is what we investors have been thinking for the last 30 days. So what's next week will look like? Well, pretty much what last week will look like. Pretty much. Not exactly, but kind of. So take a look at seasonality here for a second for Armor. Okay, now for those you don't know, the blue line represents this year's movement. Pretty safe and pretty steady. All right. The red line represents 10 years worth of data. She starts out in January and slowly falls to December. That's not a good sign. Okay, but right in this time frame where we are right now, basically just go sideways. And I hate saying sideways because stocks don't go sideways. What I mean is doesn't really go up, doesn't really go down, kind of like steady. Okay, but I personally, the numbers just don't work for me. Because at 1930, the 19s are going for 30 cents. Okay? Look, 1930, the 19s are going for 30 cents. What does that mean? Well, if I buy it at 1930, I could sell it at 19, but it's only going for 30 cents, so I'm walking away with nothing. Well, what is the next one up? The next one up is going to be 20. What's the 20 worth? Nothing. And then I have to divide that by 3 because I got to hold it for 3 weeks. And I also have to guess where's the stock going to be in 3 weeks. Yeah, I just don't do monthlies. The numbers just don't work. Not for me, not for what I like. Oh, I get 32 questions. All right, Andrew, I'm done answering your questions. You're just making nonsense. New here. What's the typical dividend distribution cycle? All right, is that baseball? Baseball swim dad. All right, baseball swim dad. Basically, a dividend. What are we looking at? The distribution cycle. Okay, dividends are paid out to the shareholders. Once you buy a stock, you become a shareholder. You get a portion of the profits. Companies choose once a year, twice a year, 4 times every quarter, or monthly. and every once in a while they can throw in a special dividend. That's totally up to the company. Most of the companies I look at here all pay quarterly every 90 days. So I throw everything that I'm looking at into a calendar. So Hewlett Packard on the 12th of June, I look at that every 90 days. Okay, Hewlett Packard every 90 days, and I'll see, is it compatible for what I want to do. How many names do you hold at a time? Oh, well, I get 6 different accounts. Wait a minute. Nope, I got 5. Oh, wait a second. I got 5 different accounts. I'm picking up a new one this week, so I'll be back up to 6 because one of them consolidated 2 accounts into one. Thank you. So now it's one less thing for me to do. So I currently have 5 accounts, and this week I'll pick up another, so I'll be back up to 6 again. So each account is different. Okay, I like to keep all the trades even. But if you say, how many do I have? I have about 30. I have 5 in this account here that I'm showing you, 4 in another account that I share with you guys. Yep. All right. And then 20 in an account that I don't share with you guys. And I only share 2 with you guys. That's it. Or reinvest dividends. Baseball, I spend all my money. House of Pfeffer. It's all about now, and making a quick buck. Yep, I hear you. HE. Now we looked. HE. Someone mentioned HE a while ago. I think it was on the list. Okay, 839. Yeah. We looked at Hawaiian Electric a couple of days ago. Okay, and we found out that Hawaiian Electric has a lot of lawsuits going on, and they haven't paid any dividends in the last. They stopped paying dividends. Okay, so it's off the list. MSFT Marathonanon. Marathon. Oh, Marathon Mon. I can't read these things so small. Yeah, we're gonna take a look at Microsoft. Does your daughter still trade like you do? Nope. She don't trade like I do. I don't think anybody trades like I do, except for some of the people here. So you're trading strictly dividend stocks. JK, yes. The reason why I strictly dividend stocks and dividend stocks only, because don't let anyone kid you. Stocks go up, stocks go down. When stocks come down, what are you collecting? Okay, if your company that you invest in is not sharing their profits and the profits are not continuously growing, what are you getting when the stock goes down? And don't tell me it's not going to go down. That's all they do. They go up, they go down. They go up, they go down. Up, down. That's all they do. All right. Do I like GM or DVN? APR. Robert, I missed what you're saying, Rob. I got to go back to these questions. He gives ideas. Ford does give dividends. Long-term keep. Well, share Rome. That's totally up to you, dude. I do weekly cash flow. Am I single? Up 5% on stock I bought for a covered call this week. Should I just sell the stock or buy the call? Milo, all right. You got to get the terminology correct, number one. Because when it comes to options, saying the wrong thing to your broker could make you lose money. Now, from what you're saying, sounds like you're up 5% on a stock that you bought this week and you haven't sold the covered call on yet. Okay, so there's a couple of ways of looking at it. One, you could sell a higher call and get a higher rate of return for the week. That's one. 2, you can just cash out and say thank you, move on to another one. Okay, a lot of things you can do. But there's a couple of things you got to keep in mind. Number 1, it's not a profit till you take it. Number 2, nobody ever went broke taking profits. And 3, you have no idea what tomorrow's going to bring. It may go up, it may go down. It's a roll of a dice, brother. Hollywood Loaf. How do you find out a percentage? Like when it says 6.5% yield, is that quarterly? No, that 6.5% yield is yearly. Okay, you're entering a world that thinks yearly, and I'm asking you to think weekly. Okay, that's one of your biggest challenges. If you want to do this trading strategy, the biggest challenge you're going to overcome is getting away from yearly returns and looking at weekly returns. Okay? Huge difference. How do you figure it out? Well, simple. What is your profit divided by what your purchase price is? Let me give you an example. Okay, right here, Hawaiian Electric. If I buy Hawaiian Electric at $8.39, that is my investment. What is my profit? Well, if I sell the 850s, that's 11 cents a share. Okay, so I'm making 11 cents a share. But if the stock goes up to 850, that's an additional 11 cents. So instead of making 11, I'm making 22 cents. All right, great. That's my profit. So 22 cents, and then I divide it by the purchase price. Clear. So 22 cents, and I divide it by the purchase price, $8.39, 8.39, and that comes a grand total of 2.6% for the week. Okay, 2.6% for the week. Remember, there's 52 weeks in a year. Okay, so where do you get the 6.9 from? Well, you take the dividend. I don't even know what the dividend is for HE. Okay. Here's an example right here. Yahoo Finance. The stock price, $60.45. The dividend, which is your share of the profits. You take your share of the profits, the dividend, you divide it by your purchase price, and that will give you your 3.3% or whatever yield it is you're getting for the year. Remember, your biggest challenge is to get your thinking away from yearly returns and look at monthly or weekly returns. Okay? Because when I used to work by the hour. I didn't work by the year. So it was tough enough. And then it was week by week. It's not, I didn't work for, a $100,000 paycheck at the end of the year. No, I worked for a paycheck at the end of the week. So I want my money to do the exact same thing. I want to get up in the morning, take a quick look at my stocks, and it doesn't take that long. Okay. It doesn't have to be as complicated as most people make it out to be. Okay. Either the numbers work or the numbers don't. Either the chart, here's the high, here's the low. What is this big drop? There's got to be a reason there. Okay, more than likely that's when the fires were and everything just tanked. Okay. All right, let's go a couple more questions. I have Ford. It shows 6.5. All right, Hollywood. Let's take a look at Ford. I like Ford. Ford used to be my fallback until I found Macy's. Macy's just started giving me a whole heck of a lot more money. All right, so here's Ford right now. Hold that thought. Let's go up here and put Ford here. All right, I'm not seeing where you see the 6% because I'm seeing 4.7% on Ford. Okay. But my way, a little bit different. 1274, if I sell it at 1250, yeah, that's not going to be enough. Yeah, those numbers don't work at all. That's a horrible one. Sorry. But I have no idea what you're talking about, Hollywood. That's why I tell people, hey, give me a call or send me a number. I'll give you a call. It makes it easier to chat. The way I get to know, because it shows 6.5%. Well, where does it show that? So I'm not quite sure where you're seeing the 6.5. More questions. Walgreens extremely down. Your prediction was questionable. Talent? Okay. Ford does give dividends, long-term keep. Share Rome, that's totally up to you. Okay. I personally don't like Ford at this junction in life. Now, last year, Ford was very nice to me. I had Ford almost like Macy's took Ford's spot. Because last year Ford paid nice premiums week after week after week. This year, Macy's, Walgreens, Nordstrom's, Kohl's, those four have been paying very nice premiums all year this year. A, B. A, B. That's a no. Okay, next. WHT. That's a no. Hollywood. So that percentage is quarterly then. Hollywood, I have no idea what we're talking about. Now, these conversations here on TikTok, they're like 1 or 2 lines, and you're like 1 in 123 people throwing out questions or whatnot. So whatever question you're referring to here, I don't remember which one it goes with. Okay, so it's like I can't carry on 15 conversations at once. Why not start with cash secured puts? Rang, or is it Ryang? Ryang? Why not? Hey, cash secured puts is a great idea. However, hold the thought for a second. You ready? Cash secured put. You're taking a bunch of cash, putting it somewhere and getting a return on it. Covered call, you're putting cash somewhere, getting a return on it. Not seeing the difference there. Okay, cash secured put before a covered call. Now you have to try to figure out where the stock's going to be in 2 to 3 weeks. I have a challenge myself trying to figure out where the stock's going to be in 5 days, 2 or 3 weeks. It's a little more complicated. And then you're forgetting one thing. This trading strategy was created for a 9-year-old little girl. It had to be simple, safe, predictable, consistent, so on and so forth. Adding secured puts into the mix just adds to confusion. And I don't like puts because they induce obligations. Okay, it's a contract. If you sell a put, then you're required to do something. If you buy a put, you're forcing someone to do something. That just doesn't sit well with me. And if it ain't broke, don't fix it. Okay, why add more stuff into a very perfectly good stew? You know, too many chefs spoil the broth. Okay, Whirlpool, Sea Stars, WHR. Interesting. I'm going to say no, but let's take a look, and I'll tell you why I say no. Okay, 101.45. So the 102s going for 65 cents. Okay, we all know that's not 1%. All right. A year ago, we're at 160. We dropped all the way down to 85. That's almost a 50% drop. Almost a 50% drop from 160 down to 85. Okay, well, let's see where we are at the 85 at the low. Okay, a month and a half ago. Let's go right just to 1 month. 1 month. Here we go. Last 30 days. Okay, down, up, down, up, down, up. Where do you think it's going next? And gaps have a tendency to fill. See this big gap right here? Okay, that is going to fill eventually. Okay, this week, next week, the week after. Okay, but the numbers don't work. Okay, at 101.45, the 102 is going for 65. That doesn't quite make it. The 101s are going for 105. You're losing 40 cents right off the top, 45 cents right off the top. Now you're even lower than that to begin with. The numbers just aren't working. Sorry. Okay, so I don't like cash secured puts because it adds an extra step. You add an extra step, means you're going to add more time sitting in front of the computer, which means you have to compensate for a higher rate of returns. And yeah, I don't. GM or DVN? Let's write those down. GM, DVN. We'll take a look at those. 22 more questions. Let's look at SMCI. I don't think you want me to look at that one. Thanks for your explanation. All right, Antonio, glad you liked it. Okay, Recon, Robert John, it's only 14.86% per year. Mo, I bought Nike 75 calls, expire next week, Friday. Mo, you sly dog, you. NKE. What? 75s? 220. So 220, so 77.50. So the stock has to be 77.50 for you to break even. 77.50 to break even. 79, almost 80 bucks for you to double your money. It's at 76. So this is one thing I don't like about buying calls. Okay, so from what you're telling me, the current price right now is 220 to buy a 75. So hypothetically speaking, at 75, 220, okay, you have to add that to that. That's just to break even. So the stock has to hit 77.20 just for you to get your money back. Okay, now we're not doing this just to get our money back. Let's say you want to double your money, so it's going to have to go to 70, another 220. So for 40, that's 79, 79.40. So it's like almost like 80 bucks before you can double your money, which means it's got to jump up to here. Could it? Yeah, it could. But that's risk I don't like to take. Okay, I'm not saying it's a bad one. I'm just saying that's, I don't buy calls for that. I sell calls. So someone is selling you a 75 at 220 and they're collecting 215. Well, great. They're making their profits, you're making yours, and everybody walks away happy. I don't see what's wrong with that. Chris, Walgreens didn't move. Best meme coins. Cool. I don't do meme coins. Sorry. I don't do any coins at all. Walgreens didn't move. Hey, Simba, how you doing? HD, Nike, Ab, okay. What's the percentage for Macy's right now? I don't know. We haven't looked at that one yet. Didn't we look at Macy's already? I think we did. 1831. Big drop. Yeah, next day or so, this thing should find the bottom. Check it out. Okay. Up, down, up, down, up, down, up, down. That's going to find a bottom. Then she's going to go back up again. Okay, works for me. Would I buy Disney? Not yet. I'd keep an eye on it. Right now, 98.02. 98.02. The 98s are going for not 1%. Yeah. And I'd wait for it to find the bottom first. Okay. She's been falling since the beginning of April. Now she's at 98.04. If you really like Disney, wait for the bottom. Over here on Instagram. James, when you pick a stock, does it matter for how many times per year the company has a dividend? Only when it's in the calendar, because I put all my stocks into the what do you call it, the Thinkorswim calendar, and it tells me when they're going to pay their dividend. Okay, so if they make the list, okay, it really doesn't matter if they pay annually, biannually, quarterly, monthly. It doesn't really matter. It only matters when do they show up on my calendar. Okay, I log into my account, open up my calendar, what's on the list this week. And that's the only one for my personal account. Those are the only ones I look at. For instance, this week I'll only look at American Express, Bristol Myers Squibb, Globe Life, and I won't look at anything else for my consideration because those are the ones that are in the let's call it a formula, so to speak, a list of stocks, okay, up for consideration, however you want to look at it. Okay, I'm not going to look at T-Mobile, Bank of America, General Motors the same week I'm going to be looking at these. That's just confusing. Now, you guys here seeing me look at bunches and bunches and bunches of stocks, that's only because you guys asked me to. Okay, normally I'd only look at 5 to 10 stocks a week. That's it. Okay, I like to roll my money. This week I didn't pick up anything. Last week I only picked up one. The week before I only picked up two. But I still averaged over 1% each one of those weeks. Okay, we're in week number 27. Okay, we're in week 27 for the year, week 1 for the third quarter. Ooh, battery's low. Let's juice you up, buddy. Where is it? Where is it? I need a plug. Hold that thought. Don't go anywhere. Here it is. I get a plug. That did it. All right, so she's charging. She's charging while I'm talking. I got it for $1.70. All right, Mo. Do you have an idea when you want to get out? Because when you buy something, you got to get out of it eventually. Okay, what's the point of buying something and just holding it forever and ever and ever? It becomes a dust collector. Unless, of course, they give you a dividend on a monthly or weekly basis and you're happy with that. Can't don't think or swim app. School computer blocks it. Bummer, dude. You could. In a day age like today, you don't have your own computer. That's weird. Anyway, you can do it online. Just use their online version because they do have an online version. Do you only look at the ones that have dividends that week? Hakuna, no. 2 weeks out. Now we are in July 1st. Okay. I'm going to go to last year's because they don't really show you. Okay, here we go. This is Warren Buffett's list. You know what? Let's go here. All right. These are all the companies paying dividends. Okay, look at them all. A bunch. We're here the first week of July. Okay. I don't want to look at those. I don't want to look at those. I want to look at these ones right here this week. Because I want to collect the premium here, be out, grab my 1%. If I grab my 1% here, I might look at it again, maybe grab another 1%. I try not to jump in on the week of the dividend because we all know the stocks go down on the EX date or after the EX date. And I don't want that. I would prefer to get a premium, be out, or a premium, be out. Worst case scenario, if I have to, premium dividend. Okay, and then try to figure out what they're going to do with the stock after that. But they must have dividends within 2 weeks. Absolutely. That's the rule. Because see, we're here. Actually, that's not where we are. We're give you some actuality. Okay, this is where we are exactly. Okay, right here. This is where we are right here, right now. Okay, so these are the companies I want to take a look at for consideration for this week. Okay, now I didn't pick up anything personally this week. Wait a minute. I picked up something this afternoon. What was it? Give me a second. I'll figure it out. I want to say Nike, but I don't think it was. I bought Nike on Friday or Thursday. Ooh. No, I did pick up one stock this week. I picked up this afternoon. But other than that, I didn't pick up anything. But I do have, like I said, 5 different accounts, so it makes it a little bit challenging. Question on Instagram. Yeah, I got those. All right. Is there anything that you check for your trades that's missing from Thinkorswim website? Nope. EXDave for Macus. Never heard of Macus. Wave Runner. Never heard of Macus. So I wouldn't know the stock symbol off the top of my head. And even if you gave me the stock symbol, it'd probably be a no because I've never heard of it. Now, I've been doing this so long that you can give me a company name and I'll know whether or not they've had 20 years of increased dividends. EX date for Macy's, that was a couple of months ago. But let's put it in. It's not in July. There it was right there in June. June. So July. So we won't see Macy's again for another 8 weeks or so. Okay, that's when they're paying their dividend in 8 weeks. That's 2 months. But it is on my list. AGNC, yeah, we can take a look at AGNC. Why not? AGNC 948. Okay, sorry, look at the numbers. The 950 is going for 4 cents. That's 0.5%. Don't get me wrong, 0.5% is 25% per year. If you're okay with that. But what don't I like about it? Well, take a look at this. Last 30 days. 1, 2, 3, 4, 5. Okay, it's actually at the bottom of a 30-day period. It hasn't been this low in the last month. Let's go back and see how far. Okay, last time it's seen this price was back in the beginning of May. Okay, so beginning of May, end of May, well, beginning of May, middle of May, end of May, June. Now we are here in July. Okay, so actually at a 30-day bottom. You got to decide, do I like this company at this moment in time? But I'd still wait for the bottom. And they're not paying 1%. So it's really not that big a deal. So it would be a no for me on AGNC. Sorry, Mac. What do you think of Payo? If it is to be, that's a cool name. Payo, you say? I think that's like peyote. Peyote. Payo. Pioneer Global. Never heard of them. And they're a no. That's a no. Sorry. PAYO. Yeah, that's a no. Bob, what do you think about VIG and SCHD? All right, I'm going to make it quick and simple, Bob. No and no. They're both ETFs. I don't do electronically traded funds, exchange traded funds, whatever you want to call them, ETFs. Okay, that a lot of them are monthlies. They don't really pay very well, and their yield is absolutely horrible. Okay, let me give you a quick little snapshot. VIG. Now, I'm not sure if you've seen any of the Terminator movies. Okay, you're handing your money over to a machine. Exchange traded fund. Well, the exchange is all electronic. All electronic, runs on electricity. Electricity. Oh, it's a robot. Yeah, you're giving your money to a machine. Say, invest this for me, and the machine saying, "Well, thank you. Of course I will. I'm going to give you 1.79% return for your money." Sorry, it doesn't work for me. Okay. And what was the other one? SCHD. It's probably almost the exact same. SCHD. Oh, it's a little better. 3.4% yield. Okay. Now, let's go here. SCHD. Monthly. Nope. What was the other one? VIG. VIG. Monthly. Nope. See? I told you wouldn't want to hear what I had to say. Okay, now, Bob, now I'm not picking on you or anything because most of us buy stuff that's usually thrust down our throats, and most of us don't want to admit that we got taken for something. You're investing your money in two companies. One pays 3%, the other one pays 1.7%. Tell me, what the hell were you thinking when you said, you know what? I think I will take 1.7%. You can put your money in treasury bills, which is even safer than the stock market, and treasury bills are paying 5%. Why are you putting your money into a machine, which is ETF, electronically traded fund, okay, that's giving you 1.7%? It makes no sense to me. All right. But anyway, you do what you want. It's your money, and I don't ever tell people what to do or what not to do. If you're okay with SCHD and VIG, perfectly fine. It just doesn't work for me. I like a safe, predictable, consistent 1% per week. And with that, they have to have 20 years of increased dividends, which means the company's over 20 years old. I don't know very many ETFs that are 20 years old and consistently increase their dividends every single year for 20 consecutive years. I don't know of any ETFs that do that. So you only look at the ones that have dividends that week. Yeah, your residents, that's correct. CP, use your phone as a hotspot to attach your laptop while making your TOS trades. Yeah, that works. That's what I do all the time. As a matter of fact, I did a live show this morning, bouncing it off my phone, my laptop, while I was at my mother's house, parked in my conversion van in the backyard, my laptop on my lap, while my son is landscaping. Okay. 3-day rule before the EX date. Well, alrighty then. Dell. Uh-oh. Yeah, we looked at Dell earlier. Altria is a good one. All right. I will add that into my manual. Thanks. All right, your residents. Uh-huh. You picked Dell, yes. What's wrong with Dell? Dell. I like Dell. The numbers worked. Okay, let's take a gander. You ready? 142.70. 142.70. We're looking at the 143s. 220. That is still over 1%. Matter of fact, let's find out exactly what it is. Okay, if I bought it exactly tomorrow morning at the opening of the market, 42.70, 142.70, and I sold the 143s, I'm going to collect $2.20 per share. I know it doesn't sound like a lot of money, but $2.20 per share, and I'm going to divide it by what did the stock cost? Well, at this moment in time, it's 142.70. 142.70. It comes to a grand total of 1.5% for 3 days. Because remember, there's no trading on Thursday, Tuesday, Wednesday, Friday. That's 1.5%. That's a 0.5% a day. I know it sounds small and trivial, but you do that every single week. That's a nice return. Okay, so yeah, I bought some this morning because it looked right. Look at the last 30 days. Okay. Down, up, down, and going back up. I'm not seeing the issue. See, here's the previous bottom, 2 days to the upside. Okay, these two are both higher than this day, so I jumped in today. Okay, and I got a little over 1.5%. I don't see the problem there because we looked at it over the weekend and Dell looked good. All right, so Macy's, we looked at Macy's. Did you DCA on Wynn? I was going to. I had plenty of money to invest, but they wouldn't let me. They wouldn't let me buy any. I don't know why. How important is it that the stock has increased 2 days in a row? All right, your residents, that is totally subjective to everybody. Okay. Now, is this the 30-day bottom? How do you know? Well, you know by all the other days prior to it and all the days after it. Well, how many days does it take for you to decide where the bottom is? Okay, 1 day, 2 days. Okay, me, it's 2 days. 2 days to the upside. Okay, that's the bottom. I'm jumping in. Some people do 3 days. Some people do 5 days. But see, the more days you wait for your bottom, see, here's the bottom here. 1, 2. Okay, then you jump in, take that ride. Well, you do 3 days. 1, 2, 3. Then you jump in, you take that ride. Okay, well, look at here. Here was the previous bottom. Okay, 1, 2. So I jumped in. It went down and it went up. But fortunately for me, it's on the upside. Okay, so the stock doesn't have to do anything for the rest of the week. It just stays right where it is. And I already got my premium, 1.5%. I got that this morning. And if the stock stays right where it is or goes higher, I'll be back, have all my cash back again so I can do it again next week. That's actually how boring it is. Will I look at Dell again? Maybe. Depends on what the numbers look like. And I don't do this all that much. All right, AFL. ALF. I don't even know what ALF is. That's going to be a no. Sorry. The only reason I'm saying no, I mean, don't get me wrong, I like Aflac. It's over a 100-year-old company. It is a dividend king, but it's just a no. All right, several reasons. You ready? 89.48. The closest strike price is going to be the 90. The 90 is only paying 10 cents. That's absolutely horrible. And then look at the chart. Up, down, up, down, up, down. She's going to the upside. Or what is this? Okay, it is going up, but it was a down day today. You know, she was around. What was? All right, let's find out the exact number. Okay, she opened up at 89.82 and ended up closing at 89.06. Okay, so she kind of went down today, but stock's still higher than it was yesterday. All right, so it is what it is. A higher bottom, I should say. But it's constant upflow. There's a lot of profit here, and it's kind of close to the high. Look where the high is, and look where the stock is. Do I really want to mess around at that altitude? Not me. You accidentally didn't see earnings were happening and get smacked. Oh my God, Andrew. I hate earnings. I do. Hassan Fefa, your residence, you can average down. Yes, you can. Inspire me more. How many of your trades this year did you get your 1% after only 1 week of holding? Inspire me more. To be 100% honest with you, I honestly don't know. I don't. Okay, I can tell you. Okay, we are in currently week number 27. Right, we're in week number 27. We're more than halfway through the year. Now, when I say I average 1% per week, that means I average 1% per week. Okay, some weeks it's not 1%, some weeks it's more than 1%. So far this year, 4 weeks, I didn't hit 1%. Okay, the worst week was 0.75, then 0.85, then 0.9, and 0.95. 4 times this year, 4 out of 27. 4 out of 27, I didn't hit 1%. But here's the thing. I'm up well over 30% in one account and well over 69% in the other account. And I'm only looking for 1% a week. And if it's 1% a week, I should be at 27% or 26%, not at 30 and 70. Okay? So, yeah, I'll do anywhere between 4 and 7 positions in certain accounts. So I don't count each position. You know, I can tell you out of every single trade I've done so far this year, I've only lost on one, if that helps. Hassan Fefa, how POS can you be? I don't know, dude. Boeing is going to be a great buy tomorrow. It could very well be. But I think Boeing Didn't Boeing cut their dividends? Let's take a gander. Yahoo Finance. Yep, they cut their dividends. So Boeing's going to be a no. Scotch, Altria. Ooh, dividend king. Gotta love Altria. Ooh. 46. Less than 1%. I don't know. Well, check it out. Down, up, down, gap. Gap filled. Up, down, up. Gap here. That gap is going to fill. And yep, she should go up a little bit higher. Should. That doesn't mean it's going to. If you like Altria. But Altria is not giving you 1%. See the 36? Sorry, the 46? So I'm paying 25 cents. What is that? Well, it's just for the fun of it. Because it's really not that bad if you think about it. I wouldn't do it because it's not enough for me. Right, 46. That's a 0.5%. But, a 0.5% over the whole year, that's 26% for the year. Some people are happy with 26% for the year. Boeing has no more dividends. Yep. What's your opinion on futures? I like futures. It's just too time consuming. So I don't do them anymore. T-Mobile. Cool. I'll put T-Mobile down. T-Mus. SPYI is good for around 12%. Yep. What are some good ones to get into currently? Well, Mike, you're relatively new here. My suggestion is sit, chill, ask questions, just absorb as much information as you can because they're all different. Okay? Each stock is different. And I don't know who you are, so I really can't tell you what or what not to do. And I don't tell people what to do, what not to do. Okay, we already looked at Mac, we already looked at AGNC, and it was a no. Yes, cut. How long have you been doing this? Over 20 years. So you've been betting your entire portfolio every week. Michael, I have 5 different accounts. And yes, 98% of my money is invested at all times. Michael, look at it this way. Money's never lost. It just exchanges, goes from one hand to the next. That's it. Government creates it out of thin air, and we exchange it one another. Some of us buy, some of us sell. Some of us win, some of us lose. It all depends on what side you want to be on. Now, I've been doing this for over 20 years. I did it right through 08. I did it right through 2021. I did it right through 2020 and all that crap. All right. So, yeah, I have all my money. Why wouldn't I? It's me, I don't want to sound cocky or anything, but some of these companies are over 100 years old. They're not going anywhere. Okay? Yes, Boeing shut off dividends. That's a no. How do you make money that you can spend every month? Tomb Raider, you're back again. Now, Tomb Raider, I just explained to you, I don't know if you were listening, that 98% of all my money is invested at all times. Let's say, hypothetically speaking, I have a $100,000 account. Okay, good. 1% of $100,000 is $1,000 a week. $1,000 a week, you can do whatever you want with it. Me, I just have to spend it because that's what I live off of. I live off the interest of my account. That's what you do when you're retired. You work 40 years or 50 years of your life, you take your money and you do something with it. Okay, either do it yourself, give it to a money manager, or give it to the ETF, give it to the exchange, they'll do it for you, and you'll get a return on your investment. Then your return on the investment is whatever you think it should be. Because if you think the ETF is fine, well, then that's what you're going to get. If you think 1% a week is fine, well, then that's what you're going to get. Okay? But eventually, we all retire and we take whatever money we have and we have to live on it because we humans are the only species on the planet that are going to pay to be here. Holy cow, it's 11:30 already. Let's go through some of these questions. General Mills, since you already said Altria. GIS. 6330. 6330. 63. That doesn't look good either. What is it with the premiums and all these big companies? But look at the chart. Okay? Down, up, down, up, down. She should be going up. Yeah, this gap is going to fill. Today was an up day. Last year, how many field outcomes did I have? Ooh, let me think. Last year, I don't think it was that great. I think I did 8 weeks where I didn't get 1%. I lost 3 weeks. Okay, it's coming back to me now. I lost money 3 weeks. Lost money in the negative. Okay, three weeks last week. 8 weeks, I didn't make 1%. But it is what it is. Yeah, I already answered that question. Instagram, yeah, I got that Instagram question. Last year, how many failed outcomes did I have for a week? Yeah, your residents. Hold on a second. Hold on a minute. Here we go. Dividend Stock Talk podcast. Wow. It's actually under my name. Here it is right here. Ow. Okay, Dividend Stock Talk podcast. You can actually go there. Nope, I don't want that. Episodes. Wow. All right, here you go. There's over 900 episodes. So you really want to know what I did last year, you can check out one of the episodes from last year. Okay, every single trading day I do an episode of what I trade. All the consumer stocks are taking hits. Yep. For those 3 weeks you took a loss last week. What were the percentage lost ballpark? Wow. Be totally honest with you, I don't pay attention to the past. Honestly, I don't. Okay? I only look forward to where I am today, in the present, and tomorrow. Last year, I mean. Yeah, I get what you're talking about. I do. I don't know. I would have to go back and look at that information. Where is the option screen on Thinkorswim? Hold on. San Antonio. The option screen on Thinkorswim. All right. Here's your home screen. That's what your home screen looks like when you sign in. Then you set it to the way you want it to open up every time you sign in. Okay, so on the home screen, right up over here, top left-hand corner, monitor, trade, the trade button. Hit the trade button. Once you hit the trade button, you will see your underlying, which is the stock, the last trade, the bid, the ask, the size, the volume, the open, the high, the low, close. Just below that, Trade grid option chain. Click onto the option chain. Whoops, not that. That's option statistics. Option chain. There it is. All right, we're way past 11:30. No, we're not. We're almost at 11:30. Did you make money this year? Yes, Alexander. 30% one count, 60% in another. Over 60, probably 70% now. Yes, I made money last year. Silly question. Where is the option screen? You got where you did that? Do I trade options? Of course I do. Did I make money this year? Well, of course I did. I live off the inter. All right. Who said that one? Alexander. All right, Alexander. Okay, listen closely. All the money I have is invested. Well, 98% of all the money I have is invested at all times. Okay, I'm at a point in my life where I don't have a need for a huge amount of cash just sitting around doing nothing. Okay, my car is paid for. Um, I have my own place. Don't have to worry about that. The income that I bring in on my investment, I live off of that. Okay, so let's say hypothetically it's $100,000. It's $1,000 a week. I use that money to pay my monthly bills. People retire for in 3 different ways. One, you age out. Okay, that means you get to a certain point and they force you to retire. You're too old, dude. Don't come back to work. Okay, that's aging out. Number two, you walk out. You say, hey, I have enough money. I don't need this job. You can take it and do whatever. Okay. Third is you get carried out. Body bag type scenario. You die on the job. The only 3 ways you're going to retire, but retirement is going to come. And you're going to have to figure out where is your money going to come from when you're retired. This is where my money comes from. I make 1% safe, predictable, consistent every week. That is my retirement money. Okay, if I didn't make my 1% every week, I'd have to cut back on some of my living or get a job. I don't like either one of those ideas. So, perfectly fine where I am. I took my biggest loss on Nike Friday. Terry, why did you do that? Okay, I saw what Nike did on Friday. Okay, I also saw what it did on Thursday. All right, so I bought it on Thursday and I just held it for Friday, and I still have it now. Okay, we'll see what happens in the upcoming weeks. Okay, what did you average percent last year? Well, it was average 1% per week, except for yeah. Well, if you average it out, even if you include the losses, okay. So it was 3 losses, 8 weeks I didn't hit 1%. Okay, so we are halfway through the year now. Week number 27. I have 4 weeks where I did not hit 1%. Okay, 0.75, 0.8, 0.85, and 0.95. Four times this year, I didn't hit 1%. Every other week was higher than 1% or 1% or higher. Okay, so same thing as last year, the year before, blah blah blah. That all averages out the same. You know, there's nothing new. There's nothing surprising. It's just the same thing over and over and over again. Now, there are some of you that have been following me since January, and you're going to say, wait a second, didn't we look at this last quarter? Didn't we look at this in the first quarter? Well, yeah. What do you think we're going to do in the fourth quarter? Look at the exact same companies. Okay, now we checked today, or was it yesterday? Well, just recently we checked 9,567 different companies we can choose from in the stock market. Why do I always look at the same ones over and over again? Well, because those are the only ones I want. Okay, so instead of taking all my money and buying a little of this, little of that, little of that, little of that, no, I take it all and I put it all in here and I take that 1%. Take it all in here and I take that 1%. So if I get 4 positions, okay, 4 different companies every week, I'll take that one. You know what? Let's take a look at it this way. Go here. Let's open it up this way. Okay. So you did comp compensate for those 8 weeks? Oh, of course I did. I said I missed 4 weeks. I'm halfway through the year, so it looks by the way I'm going, I'll probably miss eight weeks again this year. Okay, now just go with me for a second. Let's say here we are, June 2024. Baxter, eBay, Corning. Let's say I just pick one. Pick one of those. One of those three. Great. I grab my 1%. Yay. Next week, I take a look at all of these. Bank of America, General Motors, Kimberly-Clark, Pepsi, Waste Management, Kraft Heinz, Halliburton, NEM, Nordstrom's, and NE. Let's say I just pick one, and I get my 1%. Well, let's say I do this now. MPW, OXY, VFC, AIG, blah, 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 and I get my 1%. Okay, and then next week, 1, 2, 3, then I get my 1%. Okay, it only takes one decent stock on a weekly basis to get your 1%. Well, I do 5 because I like to keep my trades even. 20% here, 20% there, 20% there, 20% there. That way it makes everything easy, makes it a lot smoother. All right. See if I have any more questions. No. Facebook face planted. Hold on. I got to do this soon. Yeah, we're past 11:30. That's probably why I did that. Say, we're done. I'm out of here. One of my phones jumped out of its holder. Okay, nobody's even on there watching anyway on Facebook. If they are, I can't. Oh, yeah, Billy's watching. Hey, Billy, sorry about that. Do you sell your positions on at the end of each week? No, I don't. I let them roll until they hit my target. So you get 50% return last year. I think I got a little bit less than 50% last year. I think it was like 44, 45 last year. Where was I? Oh, I forgot what we're talking about. Are you selling weekly options, Alexander? Yes, I am. Thanks, boss. Rest easy. Yeah, it's getting kind of late. So we will catch you guys again tomorrow. Doing this all over again. Tomorrow. You're always a day. Ooh, that doesn't want to pop out. Interesting. Here we go. That popped out. Nope. Turn off. Guys, have a great night. And over here on YouTube. Yeah, YouTube, you're out of there too. Okay, and now, so we got to wrap up here with you guys here on YouTube. Have a great night. See you again tomorrow. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for that safe, consistent, predictable 1% per week. Have a nice night, and we'll talk to you again.